This is a huge week for catalysts coming up all the way up through Tuesday of next week with the election. And I want to put up the economic calendar so you guys can see some of the things that are coming our way and also get a technical analysis view of the markets, including a big moment for Bitcoin that I've been talking about on this channel for probably about 2 weeks now, about a line in the sand that we need to cross, and we've crossed it. And I'll show you that on the chart and talk to you about where that could potentially take us for Bitcoin's price in the near future. So let's put up the calendar, then we'll get over to the charts. So we're looking at trading economics right now. For trading economics, let me clear that out of the way there. There we go. Big thing today, 10 a.m. JOLTS job openings report coming for us. So that can be a catalyst. Last month, 8.04 million. This month, close to 8 million expected for us. As long as we stay north of about 7.5 million, we should be in pretty good shape. If that comes in soft, closer to about 7 million, that could be something where we see a little bit of downward pressure for the markets. A beat there, more job openings could be a stronger thing for the labor market, stronger thing for the market. So be on the lookout for that one. Moving on from there, consumer confidence. We can also watch for that from Conference Board coming out. Increased numbers there from the previous month are always going to be a good thing. A big drop in that would be not so good of a thing. So we can watch for that one. Moving on, at GDP tomorrow, 8:30 a.m. We get the advanced estimate for Q3. That comes in around 3%, we're good. If that comes in very, very weak and misses those estimates, that could be a sign that things aren't really as we thought they were. That could be downward pressure for the market. So rocking around 3%, strong numbers right up around there. That would be something that would be very favorable for the markets. That could keep that bullish momentum going for a bit longer. So moving on from there into Thursday, we have PCE numbers coming out on Thursday, the 31st of October, the last day of the month. So we have that to look forward to for inflation numbers, personal income, personal spending as well. Personal income, as long as that's around 0.2 or 0.3%, we're in good shape. If that comes in a very soft, I would say 0.1 or below, that's something that would be not so great for the markets. I don't know if it'd be the biggest catalyst. Personal spending is something we absolutely want to watch. Watch for it to come in hot. If it does at 0.4%, for example, that would be a strong thing for the markets, or even to beat that would be even stronger for the markets, because that would show that we have a whole lot more punch left at the party for that bullish direction. That number coming in soft could be a little bit downward pressure for the markets. The biggest thing, though, is the inflation number that we get out of that. So we want to be watching for those numbers on a month-over-month basis for core and a year-over-year basis for headline numbers. So moving into Friday, we have non-farm payrolls and unemployment rate. And we're watching for, will we get this consensus of 123,000 or will it go softer? We're going to have to watch for that. Also watch for revisions this previous month. So if that comes in at a very meager number, a weak number, that'd be downward pressure for the markets. High numbers, especially beating the consensus, pushing up close to that 200,000 would be something that would be very favorable for the markets. Unemployment rate, 4.1%. There's a trading economics forecast of 4.2%. Watching for that to tick back up could be downward pressure for the markets. Holding steady or even declining would be very strong, very bullish for the markets. So we're going to be watching for those. We also have ISM manufacturing data later that day. And then we move on to Tuesday, election day in the United States. At 10 a.m., we have ISM services, and we want to watch for expansion. Those numbers above 50 for expansion, below 50 for contraction. So with that said, let's move over into the charts themselves. And there's quite a bit that's interesting on these charts. Let me pop this up here for you to take a look at that. We'll get back to IWM in just a moment. Let's kick things off with SPY. Been tracking this rising wedge pattern that we're in right now, and it seems like we may have tumbled out the bottom of this thing. We're going to have to watch. Got a bit of a retest, and we're kind of in limbo right now. I don't know that we get that immediate drop and this thing plays out. I think the economic reports and the election are going to have a lot to say about this. So we want to be watchful for both of those things. That line in the sand number is about 575 that we want to watch out for the SPY. For a further drop right now, rocking along this 50 period EMA that's on here. Actually, I'm sorry, that's the 20 period. I just changed the colors on this. The 50 period is all the way down here in red. That 20 has been acting as solid support for us. That's that blue line that's coming up across your screen this way. And we're also still up on top of the 5 and the 13, which is also a bullish thing. So things are still looking bullish for a lot of reasons, whether it's the RSI for momentum or whether it's the moving averages that we're looking at, or if we go out to the monthly and weekly charts, all in bullish territory for right now. So no signs of an immediate drop, just things that we want to be watching out for. So moving over to the Qs, still inside the rising wedge pattern here in this area of resistance. Got rejected at about that 498 level, but still hanging out above the bottom of this, which is about 495. If we fall out of that, 487 is that next line to look down to. for that. Now, if I put the moving averages on here so we can see the 20-period moving average, that's this pink line. I don't know why it's a different color. I'll have to fix that. That 20 period that has been as support for us. We closed down below it going back to Wednesday of last week, but then Thursday found it as support and bounced back up strongly off of that. Did not make it back up to this top trend line. So we are currently watching. If we're able to stay bullish, 505 is on the table. If we fall down through this, 487, 479, close to 480 down below. IWM, rising wedge pattern. I have started reworking my technicals, so I'll be putting those up here soon. If you guys want to see my technicals before they hit YouTube, you can find them over at the Discord, available through the Patreon. That link is down in the description. If you want to do this technical analysis yourself and learn a trading strategy known as the bread recipe by Stockmo, you can find the Stockmo Academy course link down in the description. He's a close personal friend of mine, and I'll tell you what, it's a top-notch trading strategy that he and I both personally use, and also people who join that Stockmo Academy course will learn exactly how to use it, exactly how to set it up, what to watch for, as well as a lot more with the technical analysis. Plus, he has more coursework on the way, and there's a Discord that goes along that has a learning community and testimonials that help to support people in that technical analysis trading, including the bread recipe. Links down in the description. Use the code word doctor when you sign up for the Stockmo Academy course. It's going to save you a ton of cash. So back into the charts on this. IWM climbing that climb right now, up on top the moving averages that we have for the exponential moving averages that are on here. A very good thing. The jobs reports that we get coming up are going to probably make or break what we see for the Russell 2000. Confirmatory strength in the labor market could send us up, especially if we get soft inflation numbers. Those would be a double boon, double whammy, whatever you want to call it, for IWM. That would push the Russell 2000 stocks probably up even higher from where they're at right now. Eyeing up that 230 number is what I'm looking for next as we continue this climb. If we fall out of this, that could be a bearish thing, especially if we break this red 50 EMA that's on here. Nvidia, struggling just a little bit because big tech earnings are what we want to hear from. The rest of them that have to support, so Google and Amazon, Apple, Meta, you name it. We want those earnings reports to hear what's going on with AI to get a further beat on the AI trades that are out there. Nvidia kind of starting to taper off a little bit after it recently hit all-time highs, deciding on its next direction. Will it settle a little bit and come back down? Will it be one that gets catalyzed and pushed up to 150 finally? We're just going to have to watch and see with those big tech earnings. Tesla yesterday could not make it out of this area of resistance. It tried a little bit of a peekaboo, got rejected. Now we're trading back down below it. Pre-market hours putting us near yesterday's close. Watch for 247 down below. If we make it back up in here, we're looking for the high 260s, and sitting on top of 271 is going to put us on this trajectory to reach these other previous high prices, almost 279 and 286. And if we're able to get up there, especially above 286, I think they have that clear shot to finally push us up above 300 for Tesla. And so now the showstopper that we have here is Bitcoin. That critical line is 69,711. If you've been watching my videos, I've been talking about how important it is that we break over that. Today, we're getting a full candle above it. If we can close up above here, that is a very bullish thing to watch it continue. We got bullish momentum, near overbought, but not quite overbought on the daily chart for Bitcoin. And if we're able to get up there, that sets up the path that we have. Not necessarily a straight shot, but one that we want to watch for these lines of resistance that are on here up to that 85.5 that I think that we could hit within the next 6 to 12 months. I think that that is a good range to see that take place as this is out here right now. Now, mind you, this is just showing the different resistance levels to the upside and where we could possibly find those hesitations as we travel upward with Bitcoin. This doesn't necessarily set up time for us. This is, again, just making a nice visual across your screen. These would be the things to watch out for. If we hit 85.5, I think it's going to happen very quickly. For Bitcoin, it's going to happen very rapidly. I don't think it's going to be a gradual, zigzaggy approach getting up there. I think when we finally break out of this range that we've been trading in for a while now, between these blue lines mostly, that's going to be that thing. Once we finally solidly break out of those blue lines, I think that sends us up to this next blue line that's up here, which you can't totally see, but it's there, up to that 85.5. That I think can happen, like I said, next 6 to 12 months out here. This puts us out to March, just to give you an idea of how far out we're looking. That's about 5 months out there, so 6 months would be out here. So about, what would that be, about April, end of April next year, April, May, for when I think would be the early time to expect that. We could see it sooner, because like I said, when it starts moving, man, it could really get moving. So if it happens within 6 months, hey, we're golden. If it happens within 12 months, we're golden. I think that it's going to be within either of those two time frames. I don't think it's going to extend beyond that. Now, mind you, we could hit another crypto winner and it could send us down, but we would see that coming well in advance of hitting that number as we'd start to fall down through these support prices that you see heading on down here. But we are above this 50% Fibonacci level and above the 61.8 and now climbing up above the 78.6. If we're able to keep that as support for us, I think we have the shot at that 100% Fibonacci level at 85.5. So guys, thank you very much for watching. Check out the links down in the description, the Discord to find those technical analyses and my buys and sells before they hit YouTube, and then also that technical analysis if you want to do it yourself, empower your portfolio through technical analysis trading, especially with the bread recipe at your side. Stockmo Academy is the place to go. Use the code word doctor when you sign up, give you a massive discount, and you will find a lot of success with that bread recipe. While there's never any guarantee of profit, I can tell you that when adhered to strictly, it is very solid, and there's a lot of people finding more success than they are failures in that, oftentimes paying for their course in as little as one trade. Guys, thank you for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.